Alrighty, hi folks, welcome back to our channel. I'm Becky with Enduring Finances, and today we're going to be taking a look back on the dividend income that I earned from the month of May and breaking down all of the various dividends and how much they were individually. So just to make sure that we're all on the same page, the overall goal of my stock portfolio is to function as a long-term dividend growth account. The future goal is to have it be about $600,000, making about a 4% annual dividend return, which is about $2,000 a month on average in dividends, or about $65.75 a day on average. Our goals for this year is to reach the value of $32,500 in the portfolio. Right now, we are not close to that because the market is down, but we're still looking for it. And another goal is to earn $1,200 in dividends for the entire year, for the entire 12 months, and to reach an average dividend amount of $100 monthly. So those are the goals that we have for the portfolio. So my diversification strategy is broken down like this. Our two biggest dividend income earner sections are finance and real estate. And real estate has been taking a hit in the market lately, but together they make up over 50% of my entire dividend earnings. You can see that they're definitely down, and what I will be targeting to reinvest my dividends earned back into, at least right now. We went ahead and closed out the month of May with the portfolio being a little bit up from April, sitting at $30,067.92. We're up about $410 from last month, or about 1.38% overall. And for the entire year, we are only down about 2.6% in the portfolio. So we are definitely seeing the market decline. March was a good month as far as the market growth, but I think we're doing all right still. I'm not worried. I have no intentions of selling or running away because this is just what happens in the stock market, and we have a long-term approach and we are just rolling with it. Alrighty, so let's kick things off with looking back on how I reinvested the dividend income that I earned from April during May. So we bought into two separate companies in three separate transactions. Our first was with Bank of America, ticker symbol BAC. We purchased one share of their stock for $32.12, bringing up our overall portfolio percentage for them for 3.34%. And then the second company that we reinvested back into is another one that is in the real estate sector, and that is Annaly Capital Management, ticker symbol NLY, and we bought another 8 shares through them through two different transactions. The first one, I incorrectly put the number of shares that I wanted to purchase, so we ended up purchasing only one when I wanted more than that, so we had to go back in a later date and reinvest that. But we bought, the average price for those 8 shares we bought for $7.68 a pop, and that is what we reinvested back into. Alright, so as far as dividends goes, May was a pretty good month. We know it's it's one of the lowest months that we have as far as those dividends coming in, because most of them pay out quarterly, so we're not seeing the same amount every single month. So we made $66.79. Overall, we're almost to $460 in dividends this year alone, and we will see next month be slightly higher, probably around $80, $90, and then July will again be probably $120 something dividend payout, so we are very happy with that. We can see that the quarterly dividends are continuing to increase over time. We're now to $192.44 for the second quarter of the year. So very happy to see that continuing to progress. Alright, so let's get into the individual dividends that we earned in May, starting off with May 2nd from ticker symbol GIS, which is General Mills. We got a whopping $4.59 for the 9 shares that I own. The average purchase price for each of those shares was $62.30 a piece. Right now, we are up about 12.12% in this position, and it makes up about 2.1% of my entire portfolio. For our dividend number 2, coming in again on May 2nd, is ticker symbol JPM, which is JP Morgan Chase & Company, which is a fantastic organization. For $7, we have 7 shares of their stock. The average purchase price for each one of those shares is $137.23, and right now we are down about 3.6% in this position overall. and it makes up just shy of 3.1% of my entire portfolio. Our third dividend coming in, again on May 2nd, is ticker symbol T, which is AT&T Incorporated. Now, this company just went through a massive dividend slash, and so they essentially cut their dividends in half. They were paying out 52 cents a share, and they brought it down to 0.278 cents a share, so cut it in half drastically. One of the interesting things that AT&T did with this dividend cut is they did a spin-off to Warner Media in a Discovery deal, and I'll show you the news little clip that I got about it. So essentially in 2021, they struck a deal with Warner Media to slash their dividend in exchange for 0.24 tenths of a share of the new Warner Brothers Discovery stock. And so I was essentially grandfathered into that. Anybody that owned shares of AT&T, ticker symbol T, was grandfathered in and given shares for each share of their stock. That sounds really weird, but that's what happened with that. So like I would say for the last while, AT&T has been really struggling with their stock price. They have dropped down from $22 and they bottomed out at the end of the year at, about $18 a share. And since they announced this deal and did this, we have seen their stock price increase back up to, right now it's sitting at about $20, almost $21 a share. And we know that's not all due just to this one deal. The company has done a lot to continue moving forward and improving. And I think that's a big reason why I'm not going to sell out of this position, because they are making new deals. They just entered into a internet distribution agreement with the Dish networker, and that's going to, increase that and go through fiber optics and all of those things. And then back in April, they actually won a $15 million contract with the U.S. Defense's telecom network, which handles like the reserves and the National Guard components of all of their networking support services, which is a huge contract. And this is an 11-year contract. This is not a year or a couple years. This is 11 years. This is over a decade that they're going to be working with this military. And the military is only improving. Like, we know the National Guard and Reserves are on an higher up tempo and they're requiring more. And this is a really good thing. So I have no issues with retaining AT&T. Even though they did slash their dividend in half, I think that this company is still moving forward, and we're going to just kind of ride the waves and see what happens. The only bit that I am questionable right now is what I'm actually going to do with those Warner Brothers shares that I got. This stock hasn't been doing well, and so by the time I got grandfathered in, I think the majority of people that went through that have sold those positions, because we saw a massive decline as soon as that happened, where it just skyrocketed down, and we're down over 50% in this position that we were grandfathered into. And so for right now, I'm holding, because I am not sure what I want to do with it. I don't know if the company, well, for one, the company doesn't pay off a dividend, which is a bad thing. That doesn't help my dividend growth portfolio. But the thing right now is the market is very, very bad. Most companies are struggling and are down, so it's not a good time to sell. And I think a large majority of these sales are from people who were grandfathered in from AT&T. This is just my speculation. And so they went ahead and sold, and so we saw a massive cut in their price because everybody was getting out of that position because they didn't want it, they wanted AT&T. So for now, I'm going to hold and kind of see what happens and evaluate and make a decision down the line on what I want to do long term with this position in Warner Brothers Discovery Incorporated. But for now, we're just sitting tight and seeing what happens. I'm planning to continue and retain AT&T in my portfolio overall. Alright, so getting back to the dividends, our last and final dividend that came in on the 2nd of May is ticker symbol TD, which is Toronto Dominion Bank, which is a Canadian company. So we do have that 15% tax that is already taken out by my brokerage accounts. So we ended up with $10.82, excuse me. So we ended up with $1.17 out of the deal for the 2 shares that I own. The average purchase price for those shares was $59.11 a piece. And right now we are up about 29% in this position, and it makes up about 0.5% of my entire portfolio overall. Now we did see a slight decrease in this stock dividend as well. So they decreased from about 71 2/10 of a penny down to 69 2 cents of a penny. So they essentially dropped 2 cents. Their dividend history is not the greatest. They've been a little bit over the place in the past year or so, especially with COVID and everything. And so their dividend decreased a little bit, increased a little bit, increased some more, and now it's decreasing. So I'm just maintaining it and not letting it stress me out too much while they're figuring out all their things. It is a wild time as far as finance and economics and the financial stability of all of our countries in the entire world. So we are moving forward with this. Our next dividend came in on the 5th of May, which is ticker symbol BNDX, which is that Vanguard Total International Bond Index Fund that we invested in. We made 8 cents from the 2 shares that I own for an average purchase price of $52.49 a share. And right now we are down about 3.89% in this position overall, and it makes up about 0.34% of my entire portfolio. So our next dividend coming in on the 10th of May is ticker symbol AXP, which is American Express Company, for $3.64. Now we own 7 shares of this company. The average purchase price for each one of those shares is $125.74. Right now we are up over $300 in this position, about 34.25%, and it makes up about 3.9% of my entire portfolio. Now this company also did a dividend increase from 43 cents a share to 52 cents a share. So we are very happy with that. I love seeing those increases, and that's what we like to see in companies, slowly increasing their dividends over time and giving it back to the shareholders. Our next dividend came in on May 12th, which is ticker symbol AAPL, which is Apple Incorporated, which you probably heard of, for $3.68. Now I own 16 shares in this company. The average purchase price for each one of those shares is $109.79, and we are up about 35.5% in this position overall. And this is the biggest position that I hold at 7.92% of my entire portfolio. And yes, they did increase their dividend by 1 cent from 22 cents a share to 23 cents a share. So good on them, slight increase, still happy with it. Our next dividend coming in on the 13th of May is ticker symbol COST, which is Costco Wholesale Corporation, which is a fantastic company. I love this company. We earned $2.70 from them and owned 3 shares of their stock. The average purchase price for those shares was $370.03 a piece. And right now we are up just under 26% overall in this position, and it makes up about 4.65% of my entire portfolio. And again, this company increased their dividends. So they increased from 79 cents a share all the way up to 90 cents a share. So we're talking an 11-cent increase, which is fantastic. They're a great company. If you were wondering what company you would potentially invest in at this current time, this is one of those companies that I would say is always on my radar of good investment potential, because they take care of their employees and they deliver goods and products that people need, those essential needs that people have. And so no matter what is going on in the world, no matter how bad of a recession, people still need to buy food, and they still need to buy clothes, and they need those basic needs, and Costco delivers that. And so I'm very happy with the way they treat their employees and how they run their business model. So they are a very good, stable choice when the market is all over the place, because they're a good company and they'll be there through it all. Fingers crossed anyways, knock on wood. That's just my 2 cents on it. Alright, so our next dividend came in on the 13th of May as well, which is ticker symbol O, which is Realty Income Corporation, for 74 cents. I own 3 shares of this stock. The average purchase price for each one of those shares was $63.96 a piece. And right now we are up about 6.67% in this position overall, and they make up just less than 0.7% of my entire portfolio. And then our last dividend that came in on the 13th of May is ticker symbol OHI, which is Omega Healthcare Investors Incorporated, for $8.04, and I own 14 shares in this company. The average purchase price for those shares was $31.30 a piece, and right now it is real estate. It is down 4.88% overall and makes up just about 1.4% of my entire portfolio. Alright, moving on. So May 16th, first dividend came in from ticker symbol ABBV, which is AbbVie Incorporated, for $1.41. We have 1 share. The purchase price for that share was $107.15. Right now we are up $40.22, or 37.54% overall, and they make up just less than 0.5% of my entire portfolio. The second dividend coming in on the 16th of May is ticker symbol HRL, which is Hormel Foods Corp, for 78 cents. I own 3 shares of this stock. The average purchase price for their shares was $46.61 a piece, and we are up about 4.4% in this position overall, and it again makes up just less than 0.5% of my entire portfolio. Our third dividend to come in on the 16th of May is ticker symbol KMI, which is Kinder Morgan Incorporated, for $1.94. I own 7 shares of this stock. The average purchase price for those shares is $13.44 a piece, and right now we are up a whopping 46.49% overall, and they make up about 0.45% of my entire portfolio, and they again are the last company that we saw to increase their dividend this month. They increased it from 27 cents a share to 27 8/10 of a penny, so 0.27 to 0.278 a share, so a slight increase. Happy to have it, always happy to have it. Good things on them. The next dividend that came in on the 16th of May is ticker symbol NNN, which is National Retail Properties Incorporated, for $2.12. I own 4 shares of this company stock. The average purchase price for those shares was $41.13 a piece. We are up just over 7.7% in this position overall, and it makes up just under 0.6% of my entire portfolio. Now, the next dividend to come in on the 16th of May, it's a big day for us, was ticker symbol OKE, which is Oniok Incorporated, for $4.68. I own 5 shares of this company stock. The average purchase price for those shares was $46.68 a pop. We were up over $95 in this position, or about 41% overall, and it makes up 1.1% of my entire portfolio. Now, the last dividend to come in on the 16th of May is ticker symbol STAG, which is Stag Industrial Incorporated, for 12 cents. I own 1 share of this company's stock for $44.40. We are down over $11, or about 25% in this position, and it makes up about 0.1% of my entire portfolio. Next dividend coming in on the 24th of May is ticker symbol RY, which is Royal Bank of Canada. It is a Canadian bank, so we're seeing that 15% Canadian tax come in. My brokerage account has already taken that into account, so we earn $2.38 from this. I own 3 shares of their stock, with the average purchase price being $82 even, and we're up about 27.4% in this position overall, and it makes up just over 1% of my entire portfolio. Now, a second dividend to come in on the 24th of May is ticker symbol WRK, which is West Rock Company, for 75 cents. I own 3 shares of stock in this company. The average purchase price was $38.93 a piece, and right now we are up almost 25% in this position, and it makes up just under 0.5% of my entire portfolio. Alright, our next dividend coming in on the 25th of May is ticker symbol EFC, one of our monthly classics, which is Ellington Financial Incorporated, for again $8.25. I own 55 shares in this stock, and the average purchase price for each one of those shares is $18.13. Right now we are down over $145, or we're down 14.5% in this position. And together it makes up about 2.8% of my entire portfolio. And again, the last dividend that we earned on the 31st of May is ticker symbol LTC, which is LTC Properties. Real estate is another one of our monthly earners at the end of the month for $1.90. I own 10 shares of stock. And the average purchase price for those shares was $37.52 a piece. And we are up about 3.26% in this position overall. And it makes up just under 1.3% of my entire portfolio. Alrighty, so that wraps up the individual dividends that we had. Now to my favorite part to close out this video is to take a look at the stats of how we are doing and how we can compare this to a regular day job 9 to 5. So we can look for the month of May, the average dividend yield that we had was 3.61%, so we're still less than that 4% goal. So we are slowly increasing from February all the way to March, and we are getting closer to that as we build up that real estate sector that is lagging behind. The average dividend yield that we're seeing right now is about $1,088, so we are also seeing that increase. The dividend average per month is $90.73. The dividend average per week is up to $20.94. And then that big one, how much money are we making per day off of passive dividend income, is $2.98. So I anticipate that next month we will hit $3 a day in passive income from just having our money invested in dividend stocks. So I am happy about that. That will be exciting. I think I mentioned I was going to try and buy something for $3. I don't know what it is yet, but I'm going to splurge for that $3 something. Continuing on, we are making about 12 cents an hour, or just under 0.002 cents per minute. And then if we compare that again to an average 50-hour work week, we are making 52 cents and 0.3 of a penny every single hour. So we are seeing improvement across the board in that as we build the portfolio up and reinvest those dividends that we are earning. And just for a good visual, we can see here on this graph that we are bumping up from 288 to 292 all the way to 298 as far as that daily average dividend earning. So a good trend that we are seeing no matter what the stock market is doing. We are following our goal and what our end goal is for that. And so we are following a strategy and reaching our end goal, continuing forward with a long-term growth dividend account and not letting what is going on in the market and the world around us impact how we're investing right now, because we are investing for years down the road and not months. So that wrapped things up for me. We had a really good month, a lower dividend month, but great to see those numbers keep going forward and showing us that we were on the right path and we are making baby steps to get to our goals. So I will catch you next time, guys. I hope you stick to your goals and follow your strategy and invest your money now. So, toodles.